Just a moment, please.
And whenever you're relaxing, just be mindful of the...
Unless it's intentional.
Unless it's intentional, yeah.
It's like,
how creepy.
It was so exasperating.
And Brian has a lot of cool, neat gadgets over there. You'll hear some...
From time to time.
Yeah, you'll hear some things you don't have to go, what was that?
Yeah. It's not like it's not obvious. I mean, it's not like I walked in here and like, hey, where's the audience that applauds?
Right. We keep them off camera.
Yeah,
That's
for
right.
now.
All right, here we go. You ready?
Yeah.
Oh,
Skylar, you ready?
No, I'm not going to do it.
Okay.
No.
Welcome to Silicon Valley Impact. Brought to you live from Silicon Valley, California. Please give a warm welcome to your host, Brian Sparks.
Yes. If that doesn't get your blood pumping, I don't know what will. All right, everyone in the audience, just calm down. Welcome to the show. Welcome to Silicon Valley Impact. I'm your host, Brian Sparks. The purpose of this show is to have honest conversations about what it takes to build great businesses and communities so that you can make an impact within your own. All right. Thanks, Brian.
Yeah.
We're really nailing that cadence.
I know. Well, it's important. We want you to be making an impact within your own community. That's the purpose of the show.
Yeah.
Right?
I love
and
it.
here we are making an impact within our own.
Yeah, within.
Within, not in. And Brian, how are you, my friend?
I'm doing good.
Brian.
We always have those wild audience members, yes. I'm doing good, though. Thanks for asking. This is we're recording this during Thanksgiving week. It's a short week.
Happy Turkey Day.
Yeah, happy
Thank you.
Turkey Day. And we're also getting ready to, I think next week, we're recording our last show of season 2. So that's a big milestone. We're going into season 3 next year, Brian.
Season 3.
Do we
That's
know what
amazing,
episode
right?
this is? Because at least in terms of airing, we're up to like 40-something.
42.
Is this 42?
No,
Season 2, 42.
Season 2, 42.
So we're,
Yeah, so we got to be at like 80 something. We're pushing up onto 100.
I think we're getting close to 100. We got to count it out.
We need to find somebody who can count that high and see if they can do us a favor.
We're in
Or maybe we could have somebody write a program for us.
I don't know. Yeah, there's AI for that. Yeah, we can.
Exactly. We'll put a chatbot together to count up how many episodes it's been, but it's been a lot.
Yeah,
We've had a lot
done
of fun,
well.
and we've talked to a lot of amazing people. By the way, since we're on this topic right now, Brian, I would just like to say, if you are watching on YouTube, this is a great opportunity to hit that subscribe button, right? This is the opportunity. This is your chance. You subscribe, you do the whole world a huge favor. You do yourself a favor. You'll become a better person. You'll be smarter. You'll be wealthier. You'll be wiser.
Make an impact, hit that subscribe button.
Right, exactly.
There you go.
Yeah.
All right. So yeah, I'll be headed out in a few weeks to Opal in Dana Point. So I'll be chairing actually my second year there for the co-investing summit. So I'm super excited about that. If you'd like to learn more about participating in that conference, I get to meet Chris Weber actually. Super excited about that.
That's
yeah.
sweet.
Cool. Yeah.
Hey, I also want to just take 1 second to point out that we haven't introduced all the guests yet, but we also have another guest back here.
Special guest appearance.
Skylar!
Is there a special button for Skylar? There it is.
All right. Enough of the shenanigans.
Blew my mind.
Enough of the shenanigans. I want to thank all our partners, Stack Ventures over 1900 Broadway, the Agentic, and we're also looking forward to the IIT conference in 2026. Brian, you're giggling again.
Well, I like the shenanigans.
I know. I leave you shenanigans.
You're
all
like
day long.
you're kind of a little bit kind of grinchy about the shenanigans.
I am,
Wow, you
yeah,
didn't
yeah.
like that.
No, I'm thinking about it. Is that true?
Is that true? I don't know.
I think I can be.
And I got Barron here, who used to be in radio a long time. I don't know, a long time ago, but some time ago.
No, I'm actually that old.
Yeah,
I
okay,
am
fair.
actually
I
that
can
old.
say it.
WVBC, the voice of Boston College.
Yeah.
He's getting his
good
mojo
stuff.
back. He was over there, getting comfortable in the chair.
I
Johnson
am
the mic.
having a love affair with this microphone.
So I
right
think
now. This is
a couple
gorgeous.
added seconds of shenanigans is not the worst thing that could possibly happen. That's
We'll
all I'm saying.
integrate continuous shenanigans. How about that? Is that
We're gonna say again. We'll continue the shenanigans later.
Yeah. No. We'll integrate it continuously throughout the show.
Okay. Fair. All right.
All right.
No.
Let's bring in our guests because I do not like to keep our audience waiting for all the amazing people that we have. So I wanted to introduce Bain and Kamal. Good to have you guys in. Thanks for coming out. Yeah,
so much fun being here. Pleasure.
So Bain, you've been a long time listener of the show. Kamal, you and I met last year, I think it was, at Mercedes Place during a holiday party. Hit it off. You flew in for this. You're here temporarily now.
I am. I'm here for a couple of days of meetings and Thanksgiving.
Perfect. And we timed it perfectly where you could be on the show. But I will let you guys do your intros. And Kamal, I'll start with you because as we do on Silicon Valley Impact, I don't do bio, so I'll let you do the intros.
So I'm a venture capitalist. We do venture a little bit differently, informed by 20 years of being an entrepreneur, 15 years of that angel investing. I had a career before that my father would approve of when I did an engineering degree, worked for IMAX, the movie people, MBA from INSEAD, management consultant from Bain Company. But my father sat me down when I was a couple of years into my entrepreneurial career, and he said, "How did I fail as a father? You should either have a job or want a job."
Why can't you just go out and create value like other people?
All right. So you got some great feedback from your father. Started off.
It was all out of love. I'm sure it was because he loved you.
Absolutely.
Yeah, he wanted the best for you.
Yeah.
And then what? So talk a little bit of. Well, we'll get to that. But to your intro, a lot of great history there. But thank you so much for being here, Kamal. Really, really appreciate it. Bain, good to see you, buddy. I know you and I met also probably just over a year ago.
Yeah, that sounds about right. Was able to invite you over to Sandhill Angels, which I guess is a nice segue into the intro, right?
Yeah.
So hello, Bain Cannon. Actually an educator by training. Been teaching at St. Francis High School in Mountain View for a little over a decade now. Entrepreneurship educator over there. My side hustles, which are legion, are things like Angel Invest with Sandhill Angels up in Mountain View for the last 4-ish years or so. Been able to deploy some really good capital up there. Really enjoy that group, which, by the way, for the audience, if you don't know who Sandhill Angels is, it's a angel group that was started in 2000. It's about 150 members strong. Really prominent exits, so like in the 30s, I believe we're up to now. So it's been a great group to be a part of and just kind of cut my teeth on venture investing, which I'm sure we're going to be getting into. But beyond that, I'm a child of the Bay, right? Bellarmine for high school, Holy Spirit School down in Almaden, if you really want to know what the elementary school is that I went to. But no, my roots in Silicon Valley go deep.
I love it. It's kind of like the Monday Night Football. Give your name and then the elementary school.
You're all
Brian Sparks, Boston College University.
Brian Sparks, Guadalupe Elementary. Well, good. Thanks for both of you being here. I'm excited about our conversation and kind of the history into how you got into investing. And uniquely, you both have that background in angel investing and then started your own fund. Both entrepreneurs. I mean, Bain, I think we talked a little bit yesterday about what you're working on now, and if you want, we can talk as little bit or as much about it as you want.
That's fine. No, I'm definitely an open book on that. No, there's great opportunities to talk about that. I don't know if you want to jump into that like immediately, but I think we should probably talk about venture first.
Yeah, we'll get into it. A lot to talk about. But really, I think, Kamal, what you were talking about is you had such a great role model in terms of launching into entrepreneurship. One of my favorite questions to ask people is, number one, what got you into this, but why do you love doing what you're doing? I mean, that's a big question, but how did it all begin for you?
Well, in terms of why I love what I'm doing, I think this is a good transition in here with Bain because my dad is an educator. My mom was an educator. And what I love about being a venture capitalist is it combines the entrepreneur side of working with entrepreneurs that I love, but there is a bit of an education element because I've got a little bit of gray hair on my head. And so I can sort of show people where the landmines I've stepped on are that they should be more aware of.
Male pattern baldness, it comes for us all.
There we are.
Yeah. So, okay. So you have that background with educators, but what had you kind of take your own track?
For the step into entrepreneurship, it's actually really interesting. When I was, my father, Indian origin, you want to have a good career, a good education, a good career. And what opened my eyes was actually when I did my MBA at INSEAD. And so for those who don't know INSEAD, it's sort of top 5 ranked school globally for MBAs in the past decade or so. But it is, I was in class with one of the guys who was in the program with me in sort of the small group that we did breakout work with, was an entrepreneur who ended up he launched what is today the second largest grocery chain in the country of Lithuania. But at that point, he was buying truckloads of fruits and vegetables, driving them across 4 or 5 borders, and selling them out of the back of the truck in Lithuania just after the wall had come down, etc. So I started to realize when I looked at people like that, who I was with day in, day out, I started to realize, entrepreneurship is not something magic. Anyone can do it. I'm as good as these people around me are. If they can do it, why can't I?
Yeah. And what have you kind of learned looking back, and maybe even in contrast to that moment? I mean, the entrepreneurship spirit, the hustle is super inspiring. So that's a whole other conversation. But what do you think is unique about starting a business besides a great idea? Like, where do you think it really all begins for the good ones?
I spent 7 years with Founder Institute. I forgot to mention that in my background, which is really the world's premier 0 to a half or whatever program to get you in off the ground. So I've had a lot of conversations with entrepreneurs who are going, gee, I really want to do something here, but I really want to build something. I don't know what is sometimes the conversation. Or I've got this great idea in real estate. I had problems buying a house. I think it could be better. Here's how I'd make it better. I think the things that really matter to succeed as an entrepreneur, the way I always put it to people is, what is there in your life that if you could do it, even if it failed, you wouldn't care? Because the thing you'd been working on was so big and so important and mattered so much to you that the trying to do it was gratification enough, even if you didn't get the reward.
Oh, that's so good. Oh, okay. Everyone just...
Yeah, that's
Brian,
a big, that's a big statement.
Soundbite. Yeah,
that's a big statement. I was actually just sitting here contemplating, like I got stuck in my own head thinking about what that means.
The pure action, even if you knew you were going to fail, was the fulfillment. Okay, I love that. And what I realized, and Baron, I'm going to kind of now pivot to you to chime in on this, in terms of, what got you into entrepreneurship, is that I was asked today, in fact, I'm going to be the MC for the IIT conference in 2026. I was asked in the interview, what do you think makes a great speaker? But I think this is true about great entrepreneurs, is they're great educators. And both of you have this background of education. So it's no mystery why you've been successful in what you do, but yet, Baron, you're in education now. What got you into investing in this? Is there a background? Is there a story? Or is it just an aha moment? Where was that?
Dumb luck.
I fell into it.
Well, it was a little bit of a falling into it. But really what was kind of going on was when I was starting up at St. Francis High School in entrepreneurship, teaching these kids, we had I'll call it like a Shark Tank-like thing that we had at the end of every year where the kids had to kind of pitch their business that they were thinking about. And what I realized after listening to these questions was I really didn't understand the heuristic. I didn't understand the litmus test, the rubric that these investors were using to determine the value of what my students had produced, which seemed like an odd thing as an educator, right? You generally try to start with the end goal in mind. My students must learn or be able to do this by the end. And so being completely ignorant about the way in which an investor thinks, I wanted to jump in. And so using the network that I have, was able to, I wanted to embed, frankly, at a place, maybe like it's a VC shop or angel group or somebody. And after attending meetings with them for a while, I was just like, do you want to just join? And I was like, well, I meet the qualifications, so sure, why not? I'll do it. And
you're talking about the Angel Network.
Yeah, exactly. I'm talking about Sandhill Angels specifically, right? So it's really kind of how I jumped into it, to your point, or to the question. And so therefore, I've been able to bring in really specific lessons from the way that we do due diligence, for example, on a business, and be able to bring that right back into the classroom, right? Those are the exact rubrics that we use for professional businesses. Maybe that's, they got to check the major 3 boxes. It's got to be desirable, feasible, viable. People got to want it. You got to be able to do it, and it's got to be able to make you some money. So no student businesses are allowed to launch in the second semester until they meet those criteria.
So what, Brian, you got your hand up.
I got a question about the program there at St. Francis.
Yeah, brother.
What I want to know is, here in Silicon Valley, it seems like it would be a popular program. Is it one that's very difficult to get into because everybody wants to get into it? Or is it just sort of weird and niche, like Kamal's father, like parents telling their kids, no, you're going to take more
You're gonna
math
be a
and
doctor.
science?
No, it's actually, to your point, it is a very popular program. So it's open to sophomores, juniors, and seniors, but we really only have enough space for, say, like one-ish or so sophomore per class. We run 3 classes of it because I'm limited in terms of my time, and so we'll fill 90 seats or so. And these kids, God love them, they have it's always a zero-sum game when you're picking classes. Here's only so many sections of things. Spaces for classes, and so they take up an entire year of a class just to do this. And so they are very motivated kids, right? To your point about where they're coming from in Silicon Valley, I asked the kids, how many of you are going to be going on to business school perhaps in the next year? And every hand shoots up. So it's kids that are exploring. They think, hey, maybe business is in the future for me. I got some kids that are coming from their own family businesses, right? Maybe they're, a mom and pop are running, some kind of business over here, and they feel a sense of, I might one day have to take up the family business. And so there's this sense of buy-in there.
I also think that there's a growing sentiment amongst young people maybe that having a job isn't nearly as secure as it used to be, and that starting your own business is pretty cool, and especially with the growth of social media, you see others who have their own businesses and they seem to be living these baller lifestyles.
Totally.
Yeah.
And, frankly, because of the fact that they want it so bad, I do not make it easy to get an A. This is one of those electives that's like, this is not an easy A. Might be an easy B, but it's not an easy A, right?
Oh, great.
They really got to hustle, and I make them want it because they are taking on an incredible amount of risk, whether they are, because this is the option in the second semester, they can either get capital from the school, in which case they take on, no risks, therefore they get no reward, or if they choose to invest their own capital, maybe it's mom and dad's credit card, maybe it's the money they've been saving up from like bar mitzvahs or whatever's in the checking account.
So the school invests, is that what you're saying?
Yeah, to your point, like they use their own money to go and invest, and if they, they could potentially get all the benefit from that, but it's an amazing amount of money that some of these kids will invest in their business.
Hypotheticals. You're really
these are
launching,
real no joke businesses, right? They gotta register and get business licenses, or that they gotta go, if they're doing a product, they gotta go get a sales tax certificate and all that kind of stuff.
Anything that you were incubating go large?
No, not yet. But boy, do I really want these kids to do something maybe with software, something that's scalable. Right, something that can actually kind of grow beyond, because a lot of these kids, they run into the limitations of an inability to scale, right? Maybe they become so emphatic on doing something perfectly, right? Like a young woman building like a ribbon rose or something like that. She tried to hire her little brother. Little brother was terrible at folding these little pieces of ribbon into a flower, so she fired him, and she decided to do it herself, right? But it's like
everyone learning the harsh realities of the business market.
Little
Right?
brother was 5.
Perform or get fired.
Kamal, you had a question. Go ahead.
I was just curious what type of revenue some of these businesses have generated at the end of the year.
Yeah, they're limited to a quarter, 3 months. So most that I've ever seen is about $3,500 or so. But it definitely becomes real in ways that they don't expect. Like, for example, they have to deal with I'd say the max I've ever seen a kid hold is about $250, maybe $300 in cash. But I had kids actually losing the money. Mr. Cannon, I don't know where the money went.
Oh, God. Well, that's a lesson in itself, though, isn't it?
Yes, and so to that end, I've been having to change up my lessons as the kids are learning these hard lessons. So one of the things I do is I bring in about $7,000 and real cash, which by the way is an awkward conversation with the teller. You'll never guess what I'm using this for, Mr. Teller. But I bring all of it in, and so all the groups of about 3 kids or so, they'll all get about $250, and I give them a petty cash journal. And I do these little transactions in class, and they have to hold on to the cash. And so if kids are sorting their dollars, trying to be really organized on the table, I'll go and I'll steal one of the dollars off the top of the table.
Oh, wow.
And then as they have to, with each round, they have to account for where all the money go. And so invariably when we're doing the totals, guys, I only brought $7,000 in here. Why is it that we have,
They're all listening right now and going, I knew it, that's where it went. Yeah.
He stole from.
Yeah.
And so, it's all a part of the lesson of, you got to be good at tracking. You got to be able to say, where you give yourself and your teammates full transparency. Because the moment that something goes awry, even if it's a mistake, with kids, this happens all the time. It's innocent. But the risk that they take on of was it someone in my group who stole from me? Right. That's where the drama comes in. And so they got to be kind of cognitively prepared, not just for the task of managing cash, but also potentially how do you prevent a heartbreak?
Plus, I feel like cash just makes things more concrete and real. I think that the idea of credit and things happening on a
just play
balance
money.
sheet, it's just play money. It's not actual value. There's nothing there. But if you touch cash, it becomes much more tangible and real.
It absolutely is.
I love what you're creating, these young entrepreneurs. But there was kind of this leap into your teaching credentials, but was there something before that had you teaching this path, or was it, nope, here's the classroom you're handed and you had to learn and catch up, or was there kind of a background to it?
Well, are you thinking about entrepreneurship specifically, or are you thinking about just my educational,
just your family?
teaching
Was there a family? Was there education?
Well,
was there a person, a mentor?
My entire family came from business, right? So we've been here since the 50s, right? So both my parents went to Berkeley. They went on to to jobs over in high tech. For example, my mom, my siblings, and so on are all like either at Apple or wherever. My cousins are civil engineers. I got accountants, marketers, and so on. And I'm the black sheep in the family who decided to go get a philosophy degree. So
Sure, Dad was stoked.
For me, he was really concerned that I would be poor. It finally did it was I really wanted to go back to my alma mater, to Bellarmine, and to give a life of service. I was even in college discerning the Jesuits, which, if you don't know, is a branch of a Catholic priesthood and brothers, and in that framework, I would basically take a vow of poverty. So in my head, I was like, money, what does it matter? But now that I chose the vocation of marriage instead, I have these very real responsibilities, and so in showing my dad the Bellarmine page, the step and column as they call it, and he was like, okay, at least you won't go hungry. So Catholic education has served me well, but from a mission orientation standpoint, it's what I always wanted to do since I was in high school.
Yeah.
I just had these educators that really I felt cared deeply about me.
Yeah.
And I wanted to go and be a person like that for someone else. They just seemed like they were having so much fun.
So I asked this question of everybody. I mean, there's people who immigrate into the U.S. and they find their path to entrepreneurship. There's people who go to school, they're raised in it. There's the hustle. It just comes from different backgrounds. But really, there just seems to be these character qualities that come from different life experiences that have people just curious on how to figure things out. So I want to make a leap. Now, both of you have been angel investing. Yeah. Kamal, what had you going from angel investing to creating your own fund, and kind of what is the for our audience? I actually say that to protect myself. So for our audience, what has kind of been?
You're asking on behalf of a friend?
Yeah. So I have a friend who wants to know what's kind of been your experience in the difference between the two, and why the leap.
So why the leap is because, so my partner, Michael, and I, we built a fund. We wanted to build the fund that we would take money from as entrepreneurs and invest in as angel investors. And so really the thing that caused us to create the fund is to say, what could a fund do for us that we couldn't do for ourselves? And my top angel deal, I got 30 times my money back. Wonderful deal. Made it when I was in my 30s. It took 14 years from the day I wrote the check to the day I cashed out. And it was so what we built with our fund. And by the way, that would be normal for most venture funds, that you write your check to the venture fund and 14 years later you've cashed out. But we decided, what if you could build an evergreen fund, a quarterly semi-liquid, that there's a price every quarter, is just like buying a mutual fund. And you can say, okay, it's every quarter, there's gates, so no, you can't necessarily sell exactly. You might have to wait a few months to sell, but it's a hell of a lot better than waiting for 14 years. And that's really, so we decided to create the fund. I mean, we're entrepreneurs at heart. So we created the fund because we couldn't find the fund we wanted to invest our own money in. So we created it. And then the other thing we do is, look, as an angel, I can see deals all day long through my local community. We have a fund which invests in 72 countries. I'm not seeing deals in my community in Mongolia, in Cambodia, in Ecuador, whatever it is. Although it's easy to find deals come from Silicon Valley, Toronto, New York, whatever. I mean, where my people are, it's easy to find those deals. So those were two of the things we put into the fund.
So I'm noticing a lot of the funds that are doing really well is they have this additional value add, where it's, they go global, they have a GTM strategy, they have a community, they have, insert unique. Do you think in order to be a top-notch VC at this point, or even an angel investor, you need to bring an additional value add for these startups. And then the second part of that question is, for these startups, and why?
So there was a great survey which was done by Kaufman Foundation, asking entrepreneurs what they looked for and asking VCs what they thought entrepreneurs looked for.
Lean in, everybody, on this one. Okay.
I really want to know.
Yeah.
Well, the number one thing they looked for, both agreed on this, was relationship. The entrepreneur wanted to like the investor. Pretty simple.
Mm-hmm.
I'm sorry, can we just say that one more time, please?
Go for Kamal.
Yeah, Kamal, if you could say that just one more time.
Sure, the entrepreneur has to like the investor.
Yeah. I mean, I just want to reemphasize that because we hear it over and over and over again on this show. Right, Brian?
Yeah, and I might add, the startup founder is usually just looking for the money. I mean, generally, if we're thinking generally speaking.
And forget that there's a human being on the other end of that conversation and a relationship yet to be built.
Yeah, and so often we're looking as investors for founder fit, but really the entrepreneur, the founder should be looking for investor fit, and that's so what I think you're alluding to. Yeah.
Continue. Thank you.
Well, and this was what entrepreneurs said, and I think all entrepreneurs, they want the money, and you say, okay, you get the money, but what else? I want to like the person. The number two was really interesting because the investors all said, oh, it's all about the brand. Mm-hmm. The brand was factor number 8 on the list of the entrepreneurs out of 10 factors. And like we all say, when we raise money from investors, we say we're specialists in a certain area. And as far as the entrepreneur concerned, specialization was factor number 10. They didn't care about your reputation. They didn't care about whether you were specialized or not. Factor number 2, and all the entrepreneurs out there will agree with this easily, is speed.
Yep.
Do you get me the money quickly?
Yep.
I don't want to waste my time.
Yep.
Mm-hmm.
Yep.
And then factor number 3 was deal terms.
I'm looking at Baron just squirming over there in terms of the way speed.
Well, this is exactly the thing that I think that we are constantly talking about in our angel group. So I guess I don't want to represent them, but at least, for me, cognitively, I have been always kind of confused about the value add component of VC, especially coming from an angel group, which I think, we would like to be able to say the value that we're going to create for you as investors is the access to the network, right? We have all of these wonderful 140 strong, members that, and that's a network we can tap into, right? Mm-hmm. Do you need a new sales rep or someone in BD? Heck, even I was able to bring in some of my former students and be able to apply to, cool, those are nice connections. Mm-hmm. But I think one of the things that has definitely held people up before, and I've even seen founders get really frustrated with us, is after all the rigmarole that we put them through, we were only able to write them like a 30 or 50K check, and they're like, after all of that due diligence, after what was basically 2 months or so of going back and forth and all this probing, that's it. Right. So I think that, I think to your point about the value add, which I guess to your point is like a kind of a separate issue on their list of reasons why they're looking for an ideal investor, is I get the sense that value add is not something, to your point, that founders want. It's something that the VCs have been doing to try and outcompete one another.
Absolutely.
And as a result, they've essentially been destroying value.
In fact, there's a great quote on that. A little gentleman called Vinod Khosla, sitting up on stage here in 2016, said that in his experience, 90 to 95% of VCs add no value to their companies through the advice they give, and 70 to 80% actively destroy value.
That tracks.
Oh, wow.
That tracks.
There's so much there. But come on, going back to your leap, this is a tremendously great insight. For you, you created this fund that you wanted to see.
Yes.
I mean, you've been doing this for a while now.
Yeah.
How did this is kind of a silly question, I think, but how did the market respond?
So there's two sides to the market. There's the entrepreneur side of the market, and there is the investor side of the market. Mm-hmm. The entrepreneurs just adore us. Now, the thing is, we only invest in 2 communities, and those communities are top grads of the Founder Institute and alumni of INSEAD Business School. So if you aren't in those communities, you've never heard of us. And that is just fine. Our goal is to outcompete for the best entrepreneurs in the communities we serve. And those communities are so rich with entrepreneurs, we have no need to look elsewhere.
Here's a heuristic. I'd love your perspective on this. Do you think that it should be an ideal of a VC or angel to identify a founder who really is able to take your check and run with it and doesn't need your help beyond that? Because if they need your help, they're a founder you don't want to back.
I don't care.
Oh, interesting.
I want to make money. I'm a very simple guy, which is, and that's, I think too many VCs have these rules for what they're looking for. We have an evergreen fund, so I don't care if the company will ever exit. There's one of the guys who worked as a venture partner with us sitting here in Silicon Valley. We were discussing the various companies we could invest in one day for the next. We put less than 5% of our money in first checks. We reserve 95% for follow-ons. And those follow-ons aren't necessarily made with anyone else. It's just we want to get to know the company. And then when we know the company, we can write good checks. So we're sitting there discussing the follow-on checks. And this company came up and he said, you know, I agree with everyone else around the table. This is an amazing investment. It is the best investment we can make this month. No other VC that I know could ever make this investment, though, because this company does not have a clear path to exit. And we can't write checks if you can't see where the exit's going to come from.
That's right.
But I just want to make money, so I don't care if I'm going to exit or not because it's an evergreen fund.
Now, again, for our audience, when you say evergreen fund, break that down a little bit for us.
Your evergreen fund is just like a company. Anytime someone founds a company, it's an evergreen company. It's going to last forever until it's shut down. However, most venture funds, when they're set up, are closed-end funds. They've got a fixed lifespan.
10, 15 years or something like that.
It's typically 8 + 2 + 2, 8 years, extended for 2, extended for 2 again, and then you are supposed to shut the fund down. Now, having said that, nowadays, I think it's something like 40% of all funds take more than 16 years to shut down.
Yeah, especially now.
Yeah. But it is, but all we are saying is that we aren't, because the person who runs the venture capital fund is being forced to sell their businesses by shutting down. And the biggest problem is the companies that are most successful are the ones that are least likely to want to force a sale on, because the company is just growing and growing and growing. And why force them to sell?
Yeah. So my ever active brain right now is asking me two questions. One, from the founder side, the number one question I think they have is, well, what kind of investments are you looking for? What would make me fundable aside from being part of the Founders Institute and stuff like that?
So as far as we're concerned, the only things that make you fundable are those two things. But again, part of our view is we look at the sort of pitch process that goes on, and let's be blunt. A pitch is an exercise in bragging and making promises. That's what it is. So it rewards those who brag the best and make the biggest promises. And we want to actually fund people because they're making money, not because they can brag or make promises. By the way, this is one of the dirty little secrets about venture capital, that people look at the outcome, but they don't understand why it's happening. The outcome is on the order of 3% of VC dollars go to a company with a woman CEO. Now, are women creating businesses at 3% the rate of men? No, not at all. But the problem is there are very few differences between the genders, but that is one difference, is that when it comes to bragging and making promises, men appear to have a genetic advantage. And the result is, if you run a pitch process where you are listening to pitches, you are pre-selecting. By the way, it isn't just you're pre-selecting for men, but you're pre-selecting for good-looking men. There was a study out of Harvard, identical pitch. If it's given by a good-looking man or an average-looking man, people are more likely to invest because it's a good-looking man.
This is the reason why I'm actually paid so little, is I have a voice or a face for radio. You know what I mean? Yeah.
Boom, nailed it.
Thank you, Brian. I appreciate that. That's exactly what I needed in that moment.
Love it. All right, so we're going to take a quick break. There's so many different directions I want to go here. One of the other questions I had, Kamal, is not only, what makes this a startup fundable, but also from the VC side. Well, I'm having one of those moments where I completely forgot my question.
So I didn't really answer the question about what makes a company fundable. From our point of view, when we're looking at companies, we are screening out rather than screening in. So there's a philosophy. You can be either someone who says, I'm going to say no to 199 companies and fund the 200th. And in which case you're just trying to look for everything that fits all the boxes exactly. And in our case, we say, we don't know who's going to succeed. We don't know the future perfectly. And if you don't know the future perfectly, well, you can look at people where you think it's highly likely they're going to fail. And maybe you can screen out some of them that way. But if a company has a chance, then we want to say, I don't know where it's going to go. I don't know if any of the guys here, if any of you ever looked at the Bessemer Ventures anti-portfolio?
Oh, I have not, but I also keep an anti-portfolio as well because I feel like at some point I am going to be humbled and I need that. But to your point, how is Bessemer's anti-portfolio doing?
So I would recommend anyone listening, just Google Bessemer anti-portfolio. This is a selection of companies they said no to and why. Think about the investments you would most have wanted to make in the past few decades.
Okay.
They said no to Apple, to Google, to Facebook, to Airbnb, to Tesla, and the list goes on. And
I think this is a new team, all right? So apparently they're hiring.
No, but I mean, the thing is, if you look at why they said no, when they said no to Facebook, they said, hey, kid, have you never heard of Friendster? It's over. Move on. When they said no to PayPal, it's like...
Okay, so when we come back, we're going to talk a little bit more about that. And of course, thanks for saving me, Kamal, because I remember my second question was, with things changing, technology changing, I mean, we saw a boom with the internet when it came out in the late 90s. Does it change the investment strategy now with AI? Do things move faster? How are investors thinking? We'll answer that when we come back. But Brian, take us to break.
All righty.
Emotional, damn it!
I love the way you take the cover off.
Oh yeah, exactly. It's to cover the spit and
Always
also kind of
to explore.
remove the pop peas and all that
Brian,
stuff.
are we alive?
Yeah, we are.
Okay, cool. All right,
guys are good.
We're back. Aaron is pulling apart the studio right now.
We all said ready, and then all of a sudden there's something
We're
else.
having a conversation.
I just figured I'd let that play out.
All right, we're back with Baron and Kamal. We're having great conversation, obviously, during the break. When the mics go off, Brian, the conversation really starts.
I know, it's funny how that works, right? Like everybody's like, "Oh, okay, now I can talk openly."
Yeah,
but
yeah.
everybody's also really open on the show, so it's a bit of a paradox for me.
Yeah, but let me say what I asked. You were showing Skylar the building, so that was awesome.
Oh yeah, we had a nice tour of the facilities.
Yeah, but I asked. So most VCs we have come through here, they have multiple funds. They have fund one. They raise for their fund, and usually that first fund could be a smaller fund of 15, 25 million. That's usually it. And then as they have their second fund, they'll go bigger or whatever their strategy is. But I asked Kamal earlier about this Evergreen fund, and he had mentioned that it's ongoing. And I kind of I paused and I said, wait, that's different. And so that is what kind of launched us in the conversation during the break. So now that we're back on, Kamal, tell me a little bit about that. Like how is it that your fund is able to go on and on and on as opposed to the traditional closed-end fund?
Well, I mean, it's just setting it up from the beginning. Why don't more people do funds like this? I've talked to a lot of VCs who want to do funds like this. The biggest challenge is most VC money comes from institutions like pension plans. And pension plans, and I've talked to these same institutions, and they say, we love your strategy of how we invest. Still haven't talked much about that, but we love your strategy of how you invest, how you allocate capital. But we have a real problem with your fund structure because all the other funds are closed-end. Our compliance team doesn't know how to do diligence on an open-ended fund. And by the way, I mean, for our investors, you can trade in and out every quarter, and sometimes you have to wait. I mean, people have waited up to 3 quarters so far, and we've been running 7 and change years, and people have waited up to 3 quarters to get their money out. But from their point of view, it's like there's no guarantee. Like I can force you to shut down a fund with a traditional fund, and I can't guarantee a way to force my money out of the fund. You have to wait to get buyers for it. So that's been a real struggle. But look, the way to think about it, if you don't know venture capital, our fund is really easy to understand. And if you do know venture capital, that's when it gets complicated. But I mean, what's it like for normal people? It's like buying shares in Amazon. When you buy shares in Amazon, you're not buying the existing Amazon data centers or only the new ones. You get all of the previous ones plus all of the future ones get bought at the same time you're buying that Amazon share. And it's the same thing. We have a share, which is a bunch of assets, and some are growing and some are failing, and you add it all together and you invest today, you get all of the assets we've ever invested in, and you get all of the future assets, which is just how shares in a company work. And that's exactly how we run a fund.
And so you're not raising. I mean, you always want to get good money in.
Yeah.
But someone can jump in today, or they can stay in. Or, I mean, it's almost like like shares. So it's a unique strategy. So what's confusing about it? Maybe that's why I kind of paused and waited to the break to embarrass myself. But what is confusing about it for traditional VCs to not get their mind around it?
So the biggest hurdle in doing this, and the biggest thing which you should look at if you were going to diligence an evergreen fund, is the pricing. Because I said you buy all of the existing assets. Well, what are those shares really worth? And the thing is, when I've talked to people who've been in this industry for years, and they say, look, pricing in a venture capital fund is a compliance audit level activity where you typically hold things at the last price. And there's a round every year or so you hold it the last price till the next round. Now, if you look at the shares of Tesla or whatever on the stock exchange, you can't expect those shares to stay constant in value over a 1 year period.
Right.
But the challenge then is that you, the manager, are making a judgment call about what that asset is really worth. And we have to be brutal about it. I mean, you get off a call and you say, hey, sounds like the CTO and the CEO are fighting. Is that company worth, would you still pay the same for that company today if you knew that? And of course you wouldn't. The sales have been flat for the past 6 months. Well, it's not worth what it was 6 months ago because we did not think the sales would be flat when we wrote a check.
Right.
So you have to really be willing to do that. And then you need a lot of transparency. I mean, we share back tests of, we don't know when we price any asset what it's really worth.
Right.
We are exactly right 26% of the time within 2.5%. 74% of the time, we're exactly wrong. And how do I know we're exactly right or wrong? Because you can back test every time there's a round raised in a company.
Right.
You can go back 3 months and you can say, what was it worth a quarter before?
Yeah, just using some kind of like CAGR or something like that. Yeah, to basically understand like what the growth was over that time.
It's not even CAGR. It's just like, this is the thing, as an angel investor,
Yeah.
we know damn well what we would pay for an asset. For some reason, we turn that part of our brain off when it comes to valuating it, as opposed to going, I mean, if it's like, oh my God, the CEO and the CTO are fighting, of course I'm not going to write a check there.
Sure.
But what if you had to write a check today? What valuation would you put on that?
And I mean, as a person who, like, let's say hypothetically that I was looking at your firm, like, I would have to not only think about, am I evaluating your team and your ability to, right, what's your pipeline like, what's your investment thesis, these kinds of things that I would normally constrain myself to if I'm looking to invest in your fund 3 or whatever it is that you're doing. Now I also have to do diligence on all of these companies that are in the portfolio, because I'm not just backing you guys, I'm essentially buying into your fund where I'm going to own a fraction of all of these, which, I would guess as a person who's like myself in your pipeline to be a potential investor, you have to give me like last couple of quarters of all their financials if they've been reporting them, obviously.
Happy to do some of that. The thing is that because we have 470 investments we've made so far.
God.
By the way, this is good news.
Okay,
because
tell me why.
Look, everybody thinks of venture capital as this risky activity. We've all been raised.
It becomes a bit of an index fund in a way.
Exactly.
Yeah.
That's what
you've
it is.
diversified you've sort of spread your risk out over 470 companies.
Yeah, and startups are individually risky.
That's all well and good, but then now, like for example, because you all have it into an evergreen fund, as opposed to like, hey, can I compare the vintage of like this let's say this vintage versus that vintage? What has been your performance over time? Then maybe I have some data as an institutional investor to back you. With this, I feel like do you guys like report NAV? But that's the thing, is not everything is marked to
Wait, what's
market.
NAV?
Oh, and net asset value.
Everything is marked to market.
How? What do you use? Every quarter.
Every quarter.
So what do you guys use? Like the secondaries or something? So, okay, I guess we're into defining things. So like there's a secondary market on private shares in businesses, right? Nothing is traded every day, right? Maybe for example, that's offered in a secondary market, like not people who are putting their capital directly into the business, but who are buying shares from other people. So presumably there's like some secondary activity.
What he's saying, Brian, is like, if I want to sit in that chair, you bought the chair, but I want to sit there, and so I will purchase that seat.
Fair enough.
Okay.
So
Yeah, go ahead. Go ahead. I got another question when you're ready.
yeah, sure. So the this comes back to the original thing I said, which is you as an angel investor.
Yeah.
You know what you pay for the asset.
Sure.
If I told you what it was trading at the secondary market, would that change your opinion?
Yeah, I'd want a discount.
What if it was trading higher on the secondary market?
Yeah. What if you thought it was only the company should only be valued at $2.5 million and it's trading at $7 million on the secondary market? What would you do?
Well, this is what makes a market, right? I think I'm still, to your point, I think I'm still going to be evaluating the team. Like I understand it's for me, it's all about risk versus reward. I mean, so even taking it back to fundamentals of angel investing.
Right? Stay with us.
I'm with you 100%.
Okay.
No, I got it's interesting.
So I guess going back to the evaluation of the team, I want to understand the amount of risk. So like, don't get me wrong, I love the idea of an index, right? I'm trying to do the exact same thing with I don't come in with big checks. It's like 3 to 10K checks, right?
Yes.
It's just like, and just hit as many as I can that I think could be right winners. And so I kind of like
Which,
the
by
idea
the way,
of the
is
index.
the best strategy mathematically.
Oh,
You're a
thank you for
brilliant
that
man.
compliment. Oh, I'm a brilliant investor. I appreciate you.
Thank you for joining Silicon Valley Impact.
Spread your money around, kids.
Nice, dude.
Yeah, I don't know where we were going at with the end of that sentence, but I think, like, bottom line, I think I congratulate you on the structure. I think it's really interesting. I just, to your point about like someone who's like used to looking at a different framework, it is kind of confusing on its face. Like, what do I do in terms of financial reporting? Who am I doing diligence on, and so on.
I mean, and what you should do is you start to ask the questions differently. So you start to look at structure. We are audited annually. KPMG's been auditing us past 4 years, but there's some checks and balances. We have a LP advisory committee who look in detail at all the prices before we do it. And they're not reading every price, but they're asking the awkward questions. Then we're sharing this back test information, which is like, hey, we can show you, we'll show blinded the types of discussions, the types of things that caused a valuation to change relative to where it was. And we'll show you that back test data, which says, every time there's a round, we'll show you the round, we'll show you what we had priced that quarter before. So you can start to do those numerical analyses, even though it's hard to get what is that one asset you're invested in worth, but you have the data there to be able to get comfort around, are these people doing it well? And remember, we're an evergreen fund so long as we get our pricing right, because people can ask to leave. And if we screw up our pricing and we get caught, then we are no longer an evergreen fund. We are a closed-end fund just like everyone else.
And so what would be again, if I'm looking to become a part of Loyal VC and I want to invest, what is the advantage? And say for the sake of discussion, Baron, say you had your first fund and you're deploying X amount into the market. Why would I choose this strategy versus a traditional strategy as an LP?
So if you are a Baron type who is writing a bunch of checks himself, who's got all the access he wants, you probably don't need us to give you that diversification because he's doing it himself. We are really good for the person who is the marketing manager, potentially even sitting somewhere in Indiana who is working in marketing for Procter and Gamble or whatever it is, who wants exposure to, who wants this index fund of venture capital.
I mean, it's picking an index fund. It's investing in the S&P 500 versus picking individual stocks yourself. Some people just don't want to sit around doing the research and choosing those individual funds, and so they just pick an index fund that makes them happy. And there's thousands of them.
Sure.
Right. So my question is, and I know the answer, but how, I mean, you must review all of these assets in the portfolio, and the underperformers or the ones that are losing, they get shut down inside the fund then, correct?
Well, they don't get shut down. They just get valued appropriately. So we have lots of assets which are being held at an enterprise value of $50,000. Because you never know, and we have hundreds of investments. Sometimes those companies turn around and they come back from the dead. The entrepreneur gave up, went and got a day job, but they still kept it going on the side. And then all of a sudden the business turns around and it's starting to make money again, and they give up their day job and they're back in the business.
Interesting.
That happens very rarely.
So it sounds like
happens.
then your competitor in terms of trying to find investor capital would be like a fund of funds or something like that,
Absolutely.
right? Okay, gotcha.
So you can buy a fund of funds and you can pay fees on fees, or you can you're paying 2% a year less to invest in us.
Yeah.
And then we have that much less of a hurdle. But yeah, actually the funny thing is here in the United States, our biggest competitors are fund of funds. I mean, people like Hamilton Lane put out a venture capital fund of funds last year, which by the way, this Evergreen structure, quarterly semi-liquid with gates, it's exactly what Hamilton Lane is doing. All we're doing is we're giving investors what they want, the ability to trade in and out, and you have to have some sort of gates because you can't control it. But the thing about the Hamilton Lanes of the world is the assets you buy are 90% North American, 10% outside the US. And our fund is 30% North American, 70% outside. So we're still a good way to get the global exposure.
So I got a question about deal flow, but first, do you have a minimum in terms of entry?
Yeah, 25,000.
25,000. Okay. So let's talk about a little bit from both your perspectives on the deal flow. So you're talking, Kamal, about a global access to great companies. How do you establish that? And then, of course, Baron, same question for you. I know the name recognition for Sandhill Angels or for any angel investor, deal flow is important. How have you found your position an advantage to gaining global deal flow?
Yeah. So we source only from the two networks. Number one is Founder Institute, accelerator
And I'm
program.
going to ask you a little bit more about Founder Institute because you've brought it up a few times, so we'll get to that.
So Founder Institute, it's an accelerator program. They're out recruiting people around the world. I spent 7 years working with them, and they run chapters in different cities around the world, each with a local leader. And you just go to the local leader and you say, who is your best company? And we will effectively fund them sight unseen, knowing that if they send us a crap company, then we're going to lose their number. And if they send us a great company, we'll come back and fund more of their companies. So that is how we do Founder Institute. What's interesting, we started off saying we do about half and half Founder Institute and INSEAD Alumni. And when we launched...
you said INSEAD?
INSEAD, yes. INSEAD.
Oh, AD. Okay, INSEAD.
INSEAD, yeah. It's funny when I'm in the U.S., imagine that I just said Harvard, and if I was outside the U.S., that is the brand name that it has. It is the global elites go there. Like when I was in class, the son of the Chancellor of Germany was one of my classmates. The daughter of the CEO of Mercedes was in the class immediately after me. So it's just not very well known in the U.S. But when we started, we said we do half and half, and 18 of the first 20 deals were Founder Institute deals because all the INSEAD people have money being thrown at them and they didn't want our money. And one of those two deals that we did was a woman who I begged, I knew her personally, and I begged her on bended knee, take our money, please.
Wow.
And then, but fast forward to today, because we do a really good job of supporting the entrepreneurs, we're called loyal VC because it's about earning the loyalty of the entrepreneur. And to your point about the network of angels, we've built a network now. We started with about 120 or so, but we now have a network of about 1,500 advisors around the world. Because the thing is, why the hell should you talk to a VC about your marketing strategy? Talk to somebody who does marketing all day, every day. And that's really what we've said is you've got to have humility as a venture capitalist. You can't know. You might know some stuff about financing rounds because you do that all day, every day, but you shouldn't know about all the rest of running a business. So because we've got this amazing advisor network, and I just cannot overemphasize the quality of the people in that network, the entrepreneurs from INSEAD who get help from that advisor network then turn around and they tell everybody else from INSEAD. So now the INSEAD pipeline is wide open and they're just banging on our door. We had, there's, I don't think he'll mind my mentioning his name. There's an INSEAD founder who's almost like INSEAD entrepreneurship royalty, who did a startup in Singapore. He did the first online grocery store in Singapore. He sold it to, was Alibaba or someone who bought it, and he was going to do his next startup. The VCs who funded him were all falling over themselves to write him a check. He could fund it fully himself, and he approached us out of the blue. And he said, "Hey, Kamal, I don't need your money, but I've heard that loyal is good to have on a cap table. Would you like to have me?" And it was like, of course. So, but that is because we're dealing in a community of people. INSEAD is a very good alumni network, and they talk to each other. And at this point, pretty well anyone we talk to from the INSEAD community, we can find a second-degree connection on LinkedIn instantly who will say, this is what loyal's like. And then it comes back to treating all the entrepreneurs really well so that they say good things so that that community continues to come to you.
So I'm gonna ask you the same question, Baron, about deal flow. Sure. But Kamal, when we bounce back, I want to ask you the question you set us up for earlier. We might go a little bit longer, Brian, just a little bit.
Have at it, man.
Yeah, but Kamal, you said, the question about how do you invest? That I think we teased our audience with that one. We'll come back to that. But same question for you, Baron, about deal flow.
Yeah, sure. Well, this is actually one of the beauties of an angel network, right? Is you now essentially have 140 like business developers are just running around trying to find deals, right? I mean, even from me listening to this show, shout out Silicon Valley Impact, I was listening to the show. Founder had a really interesting story. I reached out to them, I think through you or through Brian, and we were able to get the connection, and so that actually contributed to our deal flow, right? We might have individual investors that are going to conferences, or they're just somewhere in their network, and so from that standpoint, our deal flow ends up looking a great deal like our membership, which is interesting because our members are not just say from technology directly. I would definitely say I am something of a black sheep as an educator. What are you doing here? But we have an enormous number of doctors, so as a result, a lot of our deal flow has actually become biotech and medtech as well, right? Because these are the circles that you run in, and so
that's a whole other topic. I mean, being an angel investor and investing in medtech and adtech with the long trials. I mean, how do you not get washed out? But that's episode 2.
For a different day. And maybe for just someone different. And because to that point, like with the investment thesis that I have tended to steer clear of medtech and biotech.
I've done my time in medtech and biotech. I'm out. Yeah.
But to that point, like your network ends up looking a great deal like your deal flow. And just being here in the heart of Silicon Valley ultimately means that we do get a lot of local stuff, but it is fun when we're because of the prominence of Sand Hill Angels as right, because there's names like Kretzu Forum, where you got angel groups in Texas or in San Diego or wherever. Once you kind of hit that angel network, then they just start basically pitching to all of the other angel networks as well.
There's a circuit.
You know what I mean? So there is something, a circuit you go on.
Okay.
So it comes from everywhere.
That's good. All right. So Kamal, and I'm going to have the same question for Sand Hill Angel to kind of give our audience a contrast. Talk a little bit about how you invest.
Sure. Well, I mentioned the sourcing, so no pitches, referrals only. First check, $10,000 on the basis of that referral. And by the way, for the INSEAD people, we do reference checks. And that is another way to normalize things. I didn't mention earlier, we know that 3% of venture capital dollars go to companies with a woman CEO. Our fund has 30% women CEOs, not women co-founders, women running the company.
Nice.
So that's because we source by referrals. And we do reference checks, so it isn't about how well you brag, it's about how well you build up your friend, which takes a lot of the modesty out of it for those who are sort of more modest people. Our second check is $200,000. The way we write that $200,000 check is we take all our $10,000 companies every month, we stack rank them. We offer the top couple, and we've got a limit. We can't put more money into more than 2% of our companies in any one month. And then we stack rank those at the $200,000 every month. And we pick $1 million check to go to the top of those companies. But it is really, and we have monthly calls with companies. We have monthly reports. Now I'm sure Baron's sitting over there going, nobody sends you monthly reports. The trick is that first $10,000, we pay them $1,000 a month if they send us the report. And all of a sudden, the entrepreneur who had no time to send you a report, it's like, oh, you're not getting $1,000 this month. Oh, let me see about getting you that report.
But it makes sense for a fund like yours, where you have to get as close as possible to mark to market, where you're getting getting updated financials, because ultimately, I don't want us to get it back into the weeds again on finances, but this essentially you're having to do like book value or something, or you're doing some kind of multiple on revenue or something to try to get a valuation.
I mean, we look at all of those factors,
Sure.
But then you are saying, I mean, there's times when you'd look at all those factors and you'd say, well, great, this company's got a 17x revenue multiple or a 50x revenue multiple. That makes no sense. But then you'd look at everything else about the business and you go, oh, would I pay that price for it? Sure, I pay that price for it.
That's fascinating. So hold on. There's a possibility that there's a private company out there raising right now at a valuation that you guys think is a little too rich, and I could buy from your fund.
Absolutely.
I could get a cheaper multiple on you. That's compelling. That's compelling. Simply on the basis of where you guys mark them. That's super interesting.
Yeah. But yes. That's a whole. That's cool. That's a fun conversation of afterwards.
I'm sorry if I just derailed that at all, Brian.
But
No,
really,
great
this process, I mean, it's a common sense process, which is when you're first meeting the entrepreneur, you know them a lot less well than when you've been invested in them for 6 months. So write them a tiny check up front and be invested in them for 6 months before you write another check.
Yeah.
And then, by the way, on that follow-on check, I think a mistake many funds make is they say, well, I'll follow on if somebody else leads. Well, if you're having a call with the company every month and you know everything that's going on, why would you wait for someone else to lead? Jump in there when you see a good opportunity, and we will lead rounds, we will follow rounds, we will front run rounds. We'll be the only person in a round. Sometimes the entrepreneur lets us into the round, oversubscribed round 3 months after it's closed, because we've built that relationship up. We don't demand that. It's just we built the relationship up. And if you've got a good relationship with the entrepreneur, and you want to give them more money, because they realize that we don't make money off $10,000 checks. They realize we want to give them more money. So there will be times when they'll just say, we've had founders, I'll open an oversubscribed round just to make space for loyal.
So you guys don't even have any like pro rata rights written into the term sheet?
None.
Nothing? They just come back?
It's about earning loyalty. Loyalty is not something which is enforced via legal paperwork. It is earned. And if we don't earn it, we don't deserve it.
Double click on that, just for our entrepreneurs and our ecosystem, why this is so important to you, Kamal, about being loyal, this value. Go ahead. This is your TED Talk moment, because I love this.
We have a soapbox right here in case you want to stand on it.
It is about earning loyalty. You earn loyalty by being loyal. And it's really funny. When we had a marketing expert, when we named the fund, and we were starting off saying loyalty, she said, that's a really risky name, because if you are ever acting in an unloyal way, it will just blow up. Your brand will be destroyed. So we end up having to really work on the loyalty. It's a guiding principle with our limited partners. Because it's like, look, how can we say we're loyal? We're trying to earn loyalty of entrepreneurs, so we're loyal to earn loyalty, but we're not going to be loyal to our LPs? Doesn't make any sense. You've got to be coherent. Look, it is, I don't know. The whole point is you don't make money writing $10,000 checks. Small early checks is not a way to make money. You make money by the follow-on investments you make in the best if you are disciplined enough to only put money into the best. And that's a mistake many VCs make, is they do follow on to help a company, not because it is the best opportunity they have. But if you take that massive knowledge and relationship advantage, that's where you're making your money. So everything you're doing is about setting yourself up for a good follow-on check. And then you're dealing with private companies, individuals who act as individuals do, and they have agency in who they're taking money from, especially when they're successful.
Yeah, I love that. All right, Brian, as we start to wind down, I want to make sure that we give our guests the opportunity to connect with our audience. So as we start to go out, I want to ask two questions of both of you. One, what's next for you? 2026 is quickly coming. And then how can people connect with you?
Yeah, you bet. What's next for me? I have actually almost entirely pivoted from angel investing. I think I deployed, tens of thousands of dollars just in like the first 5 months. And then I ended up actually trying to stand up a local small business. And so therefore
you can talk about it because I know we didn't get to it.
Oh, that's totally fine. It's not like it's not exactly the right audience for it, but I mean, I guess if your kids are in Catholic schools, SnapFit uniforms, basically I have been pretty discontent as a father of kids in Catholic schools about the I'll say the status quo, and especially as an insider in Catholic education, it's a pity to have a partner in that, right? A third party vendor that doesn't live up to the obligations that we feel like we have to our families. And so as a result, I really wanted to step in as a mission aligned partner for a lot of these local Catholic schools and to be able to provide uniforms that are not only, we have what you need when you need. I mean, even the name Snap Fit, as in like in a snap, everything fits. We want it to your door as quickly as possible. Even this past Friday, I was visiting a startup here in Mountain View called Matternet. They're one of the only ones with the FAA type to be able to operate a drone autonomously. So we were in conversation about carrying like 4 kilogram payloads to basically drop them right into the back of people's doors from my warehouse. So like, all of the lessons of Silicon Valley in terms of using technology and using data more thoughtfully. I mean, even using like CDC data to track students' growth rates and making sure that we have exactly what people need when we think the kids are growing into those things. That ability, that use of data, I think is going to make a really big difference in the lives of families. And so that's kind of what's next for me. I have dumped 5 times as much into this business as I have for just even the first couple of months of investing. So, and it's now to the point where families are so appreciative. I keep on getting 5 stars, and the school that I'm currently serving is my own children's school. They know who I am. And so it's like, I can't stop now. I have to keep going through 8th grade. Otherwise I'm going to piss some people off. So I think where I'm going in 26 is just trying to serve more and more Catholic school families better and making sure they're feeling ready for school every day. So that's kind of where my head has been at last couple of months. How people can get a hold of me? Certainly, LinkedIn is an okay place. I certainly, if you follow, that's great. I tend to, because I work with so many students and I want to be able to give them warm introductions and kind of be their super connector from off campus and on campus, that I only actually connect with people unless I have a conversation with them first. Is that how you and I got actually connected, Brian? Were you one of my people that they connected with me? And it's like, just so you know, I really don't connect with people unless I talk to them. And you're like, this is weird, but sure, I'll jump on a call with you. Is that how we got to know each other?
I'm drawing a blank.
No, okay, never mind. But
by the way, I do exactly the same.
Do you do the same thing?
Because it's about making introductions.
Thank you.
Yeah.
Yes.
And if you want to make an introduction, you have to talk first.
Exactly.
Yeah.
And so to that end, like, I'm kind of bummed. I tried to have things bifurcated on LinkedIn just because I run in so many different circles. Like, I want things oriented by like who's alumni of whatever. So shout out to LinkedIn. If there's someone out there who works at LinkedIn, I have ideas. I want you to improve this tool for me.
So I can have the connections of the people I know and the ones who I just met. Hi.
Or separate them into my life. Like if I want to post that, I'm going to post out something to just the alumni of St. Francis or to my investor network or to like what,
that would be amazing.
That's your next
I don't need any royalties. Just build the tool. But anyway,
curating
that's a little bit about me. So Baron Cannon on LinkedIn is a great place. Otherwise, Yeah, I was about to say I could probably give my email. Is that too personal? Should people be emailing me?
We've been giving phone numbers in the past, but
Sure.
I'll put your connection on.
Show it in the show notes.
Post. Yeah,
That's
in the
right.
show
Yeah,
notes, so.
I'll give you links in the show notes.
Okay.
Yeah.
All right. Kamal, what's next for you, and how can people connect with you?
I guess the big thing which is next for me is we've spent the past year jumping through hoops so that American investors can actually buy our fund through their registered investment advisors.
Oh, wow.
And
It's a good call.
today I've put the final touches on our private placement memorandum, 83 pages of which 50 pages are legal crap. Well, sorry, important legal information you need to read before investing in our fund.
ChatGPT did it for you.
I wish ChatGPT had done
Oh,
it.
yeah.
We spent a lot of money with very good lawyers on that.
Well done. Congratulations.
But yeah, so that's the big thing now is so people can just go to whoever advises them on money and say, I want venture capital, and hey, your wealth advisor should within the next couple of months be able to just go on the platform and buy it.
You're turning the world into LPs, educating them.
Absolutely.
Nice.
Open to accredited only or non-accredited?
Open to accredited investors only. Absolutely, yes. So it's accredited investors only, but there are a lot, and thank you for
Yeah,
the
good
reminder
point of
there. It is accredited investors only. This is the funny thing, by the way. It's accredited investors only because we are a evergreen open-ended fund that you can buy or sell. It's actually harder to get legislation to buy it than if it was a locked-in fund.
Right.
Whereas as an individual, I'd rather have something I could sell than be locked into. But that's the way the legislation works. And if someone out there wants to change the legislation, even better. But that's a whole other topic.
Yeah.
You got a better chance of LinkedIn making those other changes, I think.
Yeah. Hey, and thanks for coming out to our dinner too, by the way.
Oh, it was a pleasure. Yeah.
Yeah.
In terms of reaching us, look, the website is loyal.vc. People can, you can't find information about investing on the website. You can find out about the fund and how we run. But because it is only open to accredited investors, we can't put it open. We can't have things openly. But accredited investors are always happy to reach out to me by email, kamal@loyal.vc.
Nice. Well, I want to thank both of you for being on the show today. This has been fantastic. I feel like there's been these little micro master classes on how to invest from multiple perspectives. But once again, thank you both for being on the show. Brian, great episode. One more, season 2. But we'll see you all next week. Take care. Stay safe. We'll see you soon.